a good hair day?
I have a no hair day. I don't know what kind of hair you have. So, I mean, I really don't look at people with hair anymore.
Oh, you don't?
No.
Okay.
I'm kind of one of those Sinead O'Connor kind of guys.
Oh, good to know.
Yeah.
Okay. Well, hello and welcome to the American Dream Connection. I'm Amy Atkins.
And I'm Mike Mina.
And we're here to talk everything real estate, investments, mortgages. Hi, Mike. How was your weekend?
It was fun. We had a good time.
Good.
How about you?
Yeah, it was good. Yeah,
Good.
It was good. Hey, I had a question. So I was spending some time with some friends. They have a little money to invest.
Mm-hmm.
And their question was, should we, first of all, invest now or wait for the rates to come down? Of course, I had that conversation with them, but we want to hear what you have to say.
Okay.
Also, are we better off buying a one-bedroom or a two-bedroom condo? Should we take it, buy a more expensive property, buy smaller properties, buy here, or buy out of state?
Well, I mean, a lot of that, there's a lot of loaded questions there. First of all, whatever they're going to do, real estate's all about leverage. So I like putting a little less down, and then I look at my bang for the buck with a two-bedroom versus a one-bedroom. So, any one-bedroom that I have kind of maxes out depending on the area that you have it in. So you're not getting as much bang for your buck. So the cost of a two-bedroom versus a one-bedroom, we would want to look at that and see where are we going, rents versus cost and everything like that, to see what's going to be the best deal. I would always say a two-bedroom or probably even a three-bedroom, depending on what they're doing, is going to be a better deal. What are they doing? They're taking money out of an account or something?
Yeah, let's just say they're in, it's a net investment account, and they're not real happy with what they're earning, and they're thinking, hey, how about real estate? So they had that conversation with me, and I truly believe two-bedroom is the best way to go.
No, I agree.
And then also it was, should we buy here locally, where they're living, or maybe where they're planning on retiring?
Well, California Dreamin', on such a winter's day. Okay, so we always have to get singing. But long story, I think with California, you have a lot less risk with a lot of things. So if you go somewhere into like Podunk, Arkansas, or somewhere in Arizona or something like that, you start investing out of state. What happens when the market crashes is all of a sudden it seems like the jobs go away in those areas and the renters become more scarce. And when you're here and closer to Los Angeles, it seems like you don't really have an issue. And I can go back to 2004, 5, 6, 7, 8, 9, whatever it was. I never really had any vacancies for more than, a few weeks or a few days just to repair and fix up the property. And talking to cousins in Arizona and Phoenix and Scottsdale and stuff like that, and friends in other states, they had issues with that kind of stuff. People would vacate buildings and it was really tough. And especially like on the lower end condo side, people were like, well, now the market's crashed and we can go and afford something else or whatever it is. So I am always hesitant about out of state. And I know a lot of people are big fans of out of state, but a lot of them go out of state because it's not affordable here. And even if you had to drop your rent a little bit in a bad market, which I, knock on wood, haven't seen in a long time, a bad rental market, I think you're much better off staying here in California.
Okay, so the other question was, should they take that entire lump sum of money that they have in this account, put it all towards a property, or should they leverage themselves a little more?
Well, I would look at that account and see where we're at, number one, because talk to your accountant. Don't just ask me or don't ask some dumb loan officer what you're going to do. The most important thing is to see where you are number one capital gains wise. So let's say you bought Apple at $44 a share, and now Apple's $126 a share, and you're pulling down $82 a share, but you're upset because Apple was at $180 at one point, and you're not happy. Well, now all of a sudden you're still going to have capital gains. So 300 grand might turn into 180 grand or 240 grand or whatever that number is. So you have less to play with. So the question would be, what can we do? Is there money in there that hasn't made money that we won't pay a capital gain on, that kind of thing? So we'd want to analyze that and see what the best route to go is. I also don't believe you should be out of the stock market long term. I think that you should be investing and diversifying every which way. Yeah, the market's had a tough time this last year, and real estate's stayed steady at where we're at.
So typically, again, I know the answer to this, of course, but what are they looking at as a down payment with somebody that, of course, is, W-2, showing all the income, all that?
Well, we like to see on an investment property 25% down. You can do 15% down, showing the income, and everything will work out that way. The problem is 25 is a much better rate, and again, you're leveraging. And so if your property value goes up 3%, you put 25% down, you actually made 12% on your money.
Okay, so my answer to them was don't wait, because properties will continue to appreciate, and rates will eventually come down. But your answer to that too, when people say, well, I'm kind of afraid to buy right now, maybe I'll just wait.
I was just talking to a client this morning, funny. So she wants to buy a property in Pacoima, and she's looking at this property, a really good deal. And I'm like, okay, the last one sold for X, X, and Y, and this one's 10 to 15% below the other prices. She's like, but the interest rates are so high, and the guy at Bank of America told me not to do it now. I said, well, the guy at Bank of America doesn't understand investing. All he understands is cash flow. And I said, you have your house paid for free and clear. You put money away every month. You make plenty of money. We went through all of the lines. And what it came down to is, do you want to have a property that you're paying, say, $485 for today, that will be worth $575 in 5 years, or all the way down the road? And I says, and you're going to have someone pay your mortgage off for you. And she's like, well, yeah, that's what I want. I says, then don't look at what that payment is. You pay a couple $100s a month. It's not killing you right now. So that's what we would look at. What is your situation? What can you afford? What can you afford to do, and what can't you afford to do? Mm-hmm. So in this situation, I would say keep as much as you can in stocks. Okay. Put your 25% down if you can. Don't pay capital gains if you can avoid it. Okay. And let's get to that next stage of life, which is investing in real estate, which will make money.
All right, I'm going to relay that message to them, but I think they should talk to you.
I don't really want to talk to them. They sound like good people. If they're your friends, I'll talk to them.
Well, you know, when you're in this business, any time you're involved, like it could be at a farmer's market or whatever, the questions come up about real estate. Everybody's always interested about real estate and what they should do.
Well, I will tell you, and before we move this page, everybody I talk to is like, oh my God, it's a terrible time to buy. The average consumer doesn't understand what a great opportunity we have right now. With interest rates where they are, if you ask anybody in the business, with our 6 million home shortage, and I say this every week on this thing, with the 6 million home shortage, that's not turning around tomorrow. If we build 300,000 extra homes, it's going to take 20 years to get out of this issue that we have right now, and more people are going to have babies. So don't let people tell you that this is not a good time. This is an opportunity with a not great rate, but you're going to be able to refi next year.
Great message today. Again, I think this is one of the best messages for people to just kind of get it in your head and share it. So make sure you like us, share us, pass this information on to other people. And you know what? If you ever have a question about anything, whether should I, shouldn't I, they should call you.
Yeah, call me. I'm Mike Mina.
And I'm Amy Atkins, and you've been watching The American Dream Connection, and we'll see you next time.
Thank you.